Let's talk oil and OPEC on Trading Nation with Helima Croft, head of commodity strategy at RBC Capital Markets. Helima, you literally just got back a few days ago from Abu Dhabi. You met with a bunch of oil heads of state. What did you learn?
I mean, basically, the OPEC leadership is staying firm on the production cut. With Brent touching 70, there have been a lot of speculation that the OPEC ministers would look for the exit. But UAE's oil minister, Helima Croft, who's the OPEC president for this year, he basically said the job is not yet done. We have 100 million barrels in inventories that we need to clear out. We're going to stay the course. He also said the deal was for a full year and said, look, they don't look at daily price fluctuations. They look at yearly averages. So the OPEC leadership for now is trying to signal to the market that there's no imminent exit from this agreement.
Wow. So we've got a ways to go in this deal. I don't want to look too far out, Helima, because I know with the oil world, it's very difficult. But we've seen OPEC fracture before. Yes. Do you believe that literally, I mean, they're going to keep the band together this time? Are they going to be able to do this all the way to the end of this agreement? Because half a year or three-fourths of a year is a long time.
Brian?
Yes, I am. I'm sorry. 30 years of OPEC history have taught me to doubt them.
Okay, everyone was doubting OPEC. There were so many OPEC haters out there when the deal was inked in November of 2016, and yet they've held it together. Part of the reason why I think the cheating fears are kind of overblown is really spare capacity within OPEC only sits within the GCC, Saudi Arabia, UAE, a little bit in Kuwait, and Iraq. So a country like Venezuela, sure, they would love to cheat on this deal. They need more revenue, but they just don't have the barrels to do so. Their production's going in one direction, and that's down. Same thing with Nigeria. They look pretty capped out. And in fact, you have reports out there that militant groups are threatening to take more production offline. So when you say the deal's going to fall apart, I think it only falls apart when Saudi Arabia says they've had enough. And the Saudis, for now, are very committed to seeing this through because the Crown Prince, I think he's incentivized to have this type of price environment for a whole host of reasons at home.
Has anybody else forgotten about the fact that there are numerous high-level and former high-level Saudi royal family and government official members who are effectively imprisoned, albeit at a nice hotel? They're still imprisoned, and Saudi Arabia is, in some ways, in a kind of war with Yemen. Why hasn't this mattered more?
Well, I think from the standpoint of the oil markets, I mean, I've been amazed that we've had multiple, ballistic missiles fired from Yemen into Saudi Arabia, and the market shrugs that off. I mean, for me, one of the big geopolitical stories for this year is to really watch what happens in Yemen. If one of those missiles hits a civilian target in Saudi Arabia, the entire region will be on a war footing. So I think that is a real risk, but the market's not going to do anything about it until it materializes. But the Saudi government is very, very focused on confronting Iran this year. So that is one of the backdrops for why we're concerned that oil prices could move higher based on geopolitics. U.S. Permian,
U.S. Bakken, U.S. Eagle Ford, they have seen production growth over the last couple of years. Rig counts are going up, off their lows. They collapsed, and they're on their way back up. I've reported and I've talked about how some of the people that I've met out there are saying they're having trouble finding workers. Truck drivers are in short demand. Do you think the U.S. resurgence is coming not to an end, but maybe like a peak in the short term? Because you don't have people, you don't have a business.
I mean, we are still very constructive on U.S. production, especially in this price environment for this year. But again, I mean, it's against a backdrop of a very, very healthy demand picture. I mean, if you're looking at 1.4 million, 1.5 million, or higher levels of global demand, and you have Venezuelan production coming off, even if the U.S. hits 1 million, the market can still absorb that. In fact, there's a case to be made that the market may need every last barrel coming out of the U.S. if OPEC decides to see this deal through for the full year.
Bottom line, you're bullish on oil?
I mean, we're constructive on oil. We basically think the floor has risen. And if we do move lower, we think that's a buying opportunity. We think the fundamental picture is very constructive.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.